So good afternoon, Alex. First of all, thank you very much for taking the time this afternoon to have this discussion. Much appreciated that we can spend some minutes together. Now, you're a very well-known person in the corporate insurance market, but for those viewers who may not have heard your name before, you're Alexander Mahnke. You're the CEO of insurance at Siemens AG in Germany, but you're also the chairman of GVNW. I always have to pronounce it in the right way. GVNW. It is the German Risk Managers Association. Yeah. And from those two roles, Alex, we'd be very interested to get your take on the market circumstances, especially in the fourth quarter, in the run-up to the 1st of January. It was very complicated, let's say, with capacity constraints, with price increases, and also with changes to terms and conditions and exclusions. And we'd love to hear from you how you have experienced that time.
Both personally and from the association's point of view. Well, first of all, on behalf of Siemens, we were very happy because our financial and insurance year is not 1st of January, but 1st of October. So, which, even in times of a normal market or a soft market, as we all remember not so long ago, is quite a good thing because you get to celebrate Christmas. But this year it was even a better thing because we did not have to experience what many of my colleagues in the German or European corporate insurance market had to experience, and I'm quite glad for that. When I look at that, and we've started to look at it a little bit more deeply from GVNW's point of view, because we've actually done a membership survey recently, and we'll come out with the results shortly. And the feedback is overwhelmingly very, very frustrating, or very frustrated, because we all have anticipated the market to have to harden. This is a discussion, Fred, and you remember that we've had plenty of opportunities to talk about it. The soft market, the old market, wasn't healthy. It wasn't healthy for insurers because you guys didn't earn money. It wasn't healthy for us because if you buy a product too cheap, and people who don't understand the product, they will always believe it's by nature a cheap product. So something had to happen. And we waited for it to happen. And then it started happening. And I guess I don't want to be amongst the people who say, well, this is all COVID. But COVID certainly worked as an accelerator and multiplicator at that time. Also by the fact that we had to communicate the way we are communicating right now. And I can tell you, when you look at the way the premiums have developed over the last 12 months, if you see the scarcity of capacity in some markets, the way some of the corporate insurance companies that I would have always said where long-term partners have started behaving, it was a disaster. A disaster because some of my colleagues couldn't get what they needed to get, which is okay. It's the people offering and the people buying, but it was about last minute messaging. It was about very bad communication. It was, if there was communication at all, and sometimes it was about underwriting decisions that were quite simply, if you looked at the numbers, not understandable. So overall, very frustrating, and this is what it is. And it's not a great thing to always look at the rear mirror and say, well, it's not acceptable and it has to be different. What I'd like to do is, take a step back and try to understand what the reasons are, because I can't believe this was on purpose. There must be some sort of reasons for it. And then going forward, looking into the next renewal, which, starts on April 1st, if you're honest, and then, slowly works its way through this calendar year. How can we as a market make sure that the way we engage, the way we work together can be done better than it was done most recently? So that's really the takeaway. And from the number of discussions I've started having, I can say I remain slightly optimistic that this will not repeat itself in the way that we've seen.
Okay, thank you, Alex. And I can follow everything you said. I think very frustrating trading environment, I'm sure, for customers and for brokers. It was very difficult as well. You already anticipated my next question, actually, which is really, what are your takeaways out of this, right? For you personally, but also, again, speaking perhaps on behalf of the association, are you changing the way you're going to manage risk or the way that you buy insurance? Do you have any takeaways already?
Well, I think, let's say, how did you have to be prepared if you wanted to anticipate that sort of situation, which is a theoretical question, but let me just get, for the purpose of getting at least some parts of the answer over to you, play through. I think what really helped was if you are able and continue to be able to not only understand your own risk, but also in times where there wasn't much demand for it on the other side, sell your risk. Explain what's happening in your company, have the numbers in place, especially when it comes to claims, and be able to transparently and with open communication, also throughout the ranks. Sometimes you need more people than just the insurance risk manager, sell the risk to the market. And I think that's the first point. The second point, and I've always believed in it, we live in an environment that very much cherishes long-term relationships, other than some, let's say, more Anglo-Saxon market where it's not unnatural to step in and out of risk on both sides. So I think long-term relationships can also help, because if you understand your trading partner and you understand the way decisions are made, you can also tactically play it in the right way to eventually, get what you need to get. And the third part, and that's actually something that we've seen coming already in the 1920 renewal, was that if you are and were able to understand and organize yourself in a way to actually increase deductible structures, and by deductible, I mean it in the most wide possible way, including the use of captives or other structures, so you can take part of the, or you have some of the risk remaining on your balance sheet, or you take it back on your balance sheet. That helps, especially in lines of business where for good reasons there isn't so much capacity around, or capacity that was maybe provided only for a couple of years now had to be taken back. I think cyber is a very good example of that, some of the property BI parts. And then obviously, before you ask, D&O, you really had, and we all had to be prepared for a hard D&O market, and I hope that all of my colleagues were, because what's happening right now is something that is difficult to explain, but needs to be explained, because all of a sudden, the same people who are also responsible for other risks in the company realize that now it's themselves that are in the line of fire, and you have to explain to them why maybe the program has to be structured differently. Premiums aren't that much of an issue, but all of a sudden you don't have the same sort of capacity. Terms and conditions are narrowing down, and that sort of stuff. So I think it's all about actually burning down what understanding what your role as insurance risk manager is, and prepare for the worst.
Yeah, very good. So what I hear then, Alex, is really continued focus on partnership, right, between the different market parties, real transparency from both sides, right, on risk and exposure, and perhaps within the current market environment, using tools and techniques to optimize your retention in those lines of business where that might be necessary. Sounds like the takeaways that you have, and I'm sure many of your peers are thinking about the same things. When it comes to that partnerships, Alex, obviously it takes two to tango, right? Great that you feel that corporates need to sell the risk, and I would agree with you. From our side, from the carrier side, what are your expectations in that context?
Stability and foreseeability. I mean, that's all we're asking for. I mean, not every decision we get from you will be the one that we need, or that we would want. But then, let us know in advance. Let us try to find solutions. Usually, if we know what your thinking is and you know what our thinking is, then we will always find some sort of level where it continues to be fun to play together. Let's put it this way. And usually we find that. And so I remain slightly optimistic that this was just a peak in a market that overall has always lived out of and from good long-term relationships.
Fully agree with you there, Alex. So thank you so much for sharing your views there. And partnership is the key word. Risk transparency, reliability. We'll continue to work on that together. Thank you for joining us this afternoon.
Thank you, Fred. Thank you.